Friday, August 9th. It really doesn't get any more peculiar in terms of financial markets and interest rates and the cause of up and down and whatever than it's been in the last 10 days. The credit markets, meaning the bond market, which is where mortgages go, is pricing day after day based on the latest signals from China in response to the latest actions by the White House regarding trade and tariffs. And it's an amazing kind of signaling contest between the parties. China's principal signaling is done in the evenings U.S. time as it establishes the value for the next day in which its currency will trade. And when China weakens its currency, it makes it look as though China has in mind a big fight. And then when it's not so weak the next day, then maybe there's not such a fight. The connection to your mortgage rate that comes from trade is really hard to explain, but I'm going to give it a try. If we try to hurt China to get it to agree to a trade deal that it doesn't want to agree to, China's going to respond. We see it already in data. China in July, its exports to the United States fell 6.5% from July a year ago. Meanwhile, aggregate China exports, including to the United States, to the entire world rose 3.3%. So the imposition of tariffs on China is cutting its exports to the United States, but it's forcing China to export someplace else. Now, when it exports someplace else, the effect on other nations is to have China's exporters crowding out other exporters. So nations that ordinarily would export, like Japan and South Korea and Taiwan and India, all of a sudden their businesses trying to sell goods anywhere externally run into acute China competition. The fear always in a trade war in which tariffs rise trying to prevent imports is that it slows the world down, and that's what it's doing. We don't feel it yet here in the United States at all, except in our interest rates. The mortgage rates fell decisively below 4% during the week this week. Some rose back at the end of this week, but at one point we were 3 3/4 midweek, and it entirely anticipating economic damage, but the economic damage is not yet here. It may not even get here. Central banks all over the world have begun to cut their interest rates to try to diminish the impact of the trade war. By surprise, in Asia, India, and New Zealand, and Thailand already cut. The Philippines are about to. And markets have pushed down interest rates in a lot of other places, notably Europe and Japan. So the immediate effect on the housing market, as crazy as this sounds, and as worried as the outside world is about a trade war, the immediate impact on the U.S. housing market is helpful. Rates are down. We don't care about much else. There isn't any sign of industries here hurt by the slowdown in trade with China. It may appear. The new tariffs don't take effect until the 1st of September. There's another element in play other than the direct effect of trade, which is just uncertainty. Nobody knows what's going to happen next. It's in the nature of this White House that it's unpredictable. And so the financial markets are sort of lurching from one announcement, one subtle Chinese reaction, to another announcement, back to a Chinese reaction, and so it goes. But here, towards the end of summer, kids about to go back to school, the net effect here is good news. Have a nice weekend.